Welcome back to the channel of True Trust and Transparency. Guys, here we are again. Who would have thought that little old deal reviews would be this popular? Again, one of y'all, don't know where that came from, but one of you guys on YouTube has reached out, sent through a deal, going back over to Western Australia, wants my honest thoughts and opinions on it. Without further ado, let's jump into this one. Look, I don't care where you buy. I don't care sort of who you are and what you're doing. So I'm going to tell you my honest opinion. If you've got any value from any of this deal review or of any of the other ones, I've done over 100 videos now for you guys. Hit subscribe, trying to get to 2,500 subscribers by the end of the year. I'm making this video in late October. That gives me 2 months. I don't like my chances, but I will not give up. So share it around, share it with people, try to grow the channel. And yeah, let's jump into this one, shall we? All right, so between me and you guys, the question was, hi, Dave. I really enjoy your podcast. Find your videos incredibly insightful. Would you be able to do a deal review on a property in Northam, Western Australia? I'm considering an investment opportunity there and would love to hear your thoughts. Thanks so much. I said, thank you, Michael. That's his name. I mean, it's you can go and see his comment. It's on my YouTube video. He said, hey, Dave, the address is 113 Chidlow Street, East Northam. I consider this area a real hotspot as most homes sell within just a few weeks. I'd love to hear your opinion and thoughts. So we dig into a little bit around the data. And whenever I see Perth pop up, especially people sending me through now, I just get a little bit worried. The reason is as you guys know, coming into sort of 2020, 2022, sort of Perth has had this great big run for the last 3-4 years. And I feel like anyone that's looking at Perth now, you're kind of just getting on that last year or year and a half before we see some sort of correction or some sort of leveling out. You know, a suburb can't grow at 10, 15, 20% a year forever. We obviously have those cycles. So I feel like we're getting to that sort of turning point with Perth. And I feel like if you're jumping in now, you really got to understand why you're doing it and if it is the best decision for you. So in the classic example here, now I'm on H-tag, as everybody knows. Classic example here is over the last year, Northam has done 17% in capital growth. Over the past 5 years, it's done 92%. Over the past 10 years, it's only grown 60% in growth, which tells me last 5 years, great growth. I already know what this chart's going to look like. But if over 10 years it's only grown 60%, that means it has dropped 30% somewhere in, between years 5 to 10 of this growth chart. So we're going to see a growth chart that's going to be extremely low and then going to see it buck up over the last 5 years and have done great growth. So let's see if that is the case and dig into the data, shall we? Slight difference between bedrooms, so arbitrage opportunity potentially. Now, this is the interesting thing about this. When we look at RCS scores, the higher this score, the lower the risk. If this score is low at 3, it tells me it's kind of like ringing some alarm bells. So I got to have a think about why that is. And let's see if the data tells me a little bit of a story about this. Dwellings, 4,300, 6,600 population. It tells me that there is next to no infrastructure spend. And it tells me that there is some sort of flood risk. Now, and this is exactly what I meant. Let's look at the last 10 years of growth. 2025, we're here. It's just done 17%, right? 1, 2, 3, 4, 5. Your time to get into the Perth market was between 2020 to 2022 and ride this thing up. Now, as you can see here, and as we have the estimated sort of growth run from H-tag is, if you're buying here in 2025, you're going to get growth. However, as we can see, we are potentially headed for a correction over the next 2 years. So, you're buying after it's had that run. So you're now going to be buying, maybe you get 10%, right, over the next year. Maybe you get a little bit more. But after that, you then need to hold this thing for an incredibly long time until it then hits, another growth phase of its cycle. So I would just question, what is the reason in which you are buying here? It's done great growth. To get in, I would love to have got in here. But, it's done great growth, 10, 10, 10, 15, coming off the back of a 20-year. Now, we might have a bit of growth here. But what will it return to? And you take out COVID and this run that we've had, it is literally 1, 2, 3, 4, 5, 6, 7, 8, 9 years. It has been negative in growth. So it's trying to, the question I had for you is, and hopefully, I think it was Michael, if you've been looking in this area, what gives you confidence that a suburb that has not grown for the last 9 years, that's now had this big run, will either continue to grow or be a great investment opportunity? Because these markets are almost a timing thing where you get in early, you ride this up, and then, you might sell here or you might keep, either or, but you've kind of missed that run for it. Because if you get 10% and then you get a few of these years where it's dropping 2, 3, 4, 5, 6, 7%, then you've lost your money that you've got buying into this sort of suburb. 2 URSAD, so it's on the lower side of socioeconomics. We would expect that when the price is 490s. 30% owner to ratio, again, expected. The demand is only for 3 bedrooms and the affordability is at 30 years to own. So it tells me affordability's got a little bit more to run. So again, a little bit of steam left in that market. This is interesting. 2 months of inventory. So inventory starting to increase. So more things are coming more. So there's more inventory. The stock on the market, the listings are starting to increase, and the days on market are still decreasing rapidly. So that's obviously a sign of an incredibly hot market. Days on market snowdiving. Vacancies haven't been doing too much. We're fluctuating around 4 or 5 vacancies. It's not a lot. So do I think there's still some steam left in this market? Definitely, if affordability's sitting at there and days on market's looking a little bit like this. But one must ask themselves, is after this little bit of runway that we have left, what's going to happen? Because this has been a steady driver too. It's not like we've been operating, last 3 years, this has been increasing. Have we met the peak in 2025 of affordability? And is that what's going to set us off? Questions for you, Michael. Do I like it? I don't like it. I think you've mistimed it if I'm just looking at this. Now, let's look a little bit around the area and the asset. So, for those of you that don't know where this is, so we've got Perth CBD. And this one is inland. Probably, let's see what the distance is to Perth CBD. Perth CBD. It's about an hour and a half northeast of Perth CBD. So, not a lot doing, lad, out there. But as you can see, little bit of a... It's crazy that if you look at that, the golf course is like 10% of the size of this town. That is absolutely wild. Now, the particular property as well, if we have a look here, is 113 Chidlow Street, East, Northam, Western Australia. It is located, so obviously we have a river that we need to worry about. We obviously can see that these are our main shopping precincts, the town halls, shopping centre, which is here, and The address of this is a little bit unusual. It's coming up in the middle. I think it's this one here on the street. What is interesting is we have commercial directly across the road, which isn't ideal. You know, I always say, if we compare this to a house that's, say, on this street here, what is the most desirable in terms of its location? Obviously, you want a suburban street. Let's have a look at what this building looks like when we get on the ground. But apart from that, the way these streets are calculated is I don't see it as too much of a main road. If we go a little bit further up, I don't have too many issues. We've got a adult daycare and respite centre, not known for a heap of traffic, and anything sort of further up here, Sporting Oval, we can see the car park is probably there. So not a huge issue because people will use those main roads. So no immediate signs. Just want to make sure if that is a house, it is absolutely massive. Wow. Let's have a look at it from street view. Okay, so this is it. This is the house. I hate these large bricks that people use, double-heighted bricks. Anyway, so this is it. It doesn't have, and it looks like it's only a one car space, quite a small Holden Barina, can fit in there. We've got some ramps up to the front door. This is yeah. See, this, I mean, big tree, little, not a huge issue, but what I would say to you is, look, not the most desirable location. We've got a huge, some sort of telecommunications pole, industrial sort of precinct. You got to just ask yourself, number one, if you were just on a normal suburban street, one more block back, what would be more desirable, this or the one behind? You know, what would be do you think they would be valued the same? Potentially not, given that location. Just not great outlook. Potentially as well, I want to learn from the property manager who's going to live here, because it doesn't look like the most desirable setup for families. But as we can see, pretty normal street, curb and gutter, which is great. Is there any stories that we can see from previous dates? Let me have a look. 2018. So it's the same owner. And they've virtually just lost a few trees. 2008. There you go. It looks close to being built around that time, I think. Didn't have the awning on it. Looks quite new there. So Telstra pit, no real issues in terms of the house that we can see from a date perspective. Next door's not great. Next door hasn't been great for a while. And yeah, I mean, it's a sealed street. So with that in mind, let's have a little look at the asset itself, the listing. This is it. As we know, you've got to ramp up, which is great, especially if it's an older population or tenant that's trying to get into this one. Low maintenance, space for one car space. Average inside, neat and tidy bathroom. We've got a hob there for the shower. Great. Cool. This is like before kitchen islands were a thing. These lights need to... These lights are terrible though. Looks like a little moon. Cool. No huge issues. Okay, so the other one must have been an ensuite. This looks like probably the main. I don't know what this is here. It looks like an optical illusion. Oh, I know what that is. That's the thing to hold the curtain. My mum had those back in the day. And laundry looks usable. Backyard is low maintenance too. And this is sort of your courtyard. That's the street. Now, walk off the street. This is an interesting floor plan. I haven't seen a floor plan like this in a little while. It's really it's cool. Master, great size floor plan. Lounge room is huge. I mean, I could hear the argument to try to convert that into another bedroom to give a lounge and a dining feel here, but we know that their demand there is pretty low, so there's no real opportunity there. But really great size, entry foyer, passage, dining, and then at the back that we can also corner off are the 2 bedrooms, bathroom, and the laundry. So not a bad floor plan either, and we've got this sort of built-in patio, which is cool. And that's about it. Okay. One thing I wanted to firstly check was when it's on a river, we want to check flooding. Western Australia actually has fantastic floodplain mapping facilities that are ran from the ArcGIS and Esri, which is like your cadastral software, which is super up-to-date and accurate. One thing I would encourage you to check that I found was the titling of this one is a little bit weird. When I put it into Land Checker and I wanted to see, it was kind of came up as one block and it wasn't its own title. So I just check what comes back and how this is split up. See how it's one block here. I don't know if it has been carved up, if there's an issue with the cadastral, but there's maybe something to check with. As you can see here, as I zoom out, cursors where the house is. We're a decent distance away from any flooding. So flooding's not an issue. Again, see, this is in Land Checker. It comes up as an 1,800 square meter lot. So I don't know if it's been carved up or what the go is, but just a amber flag to check around the titling. Zone the same as everyone else. No other huge issues. We can see, it's falling towards the street. No easement issues. That's about it. Every time I see a low ersat, I also like to check the public housing numbers and availability and what the ratio is. So we're obviously located just in here, 2.8%. Keep in mind, there are some other pockets that are less desirable, especially just next door, 21.5%. So it tells me, commercials here, parks here. It tells me a lot of these houses here would be public housing. Just something to note and be comfortable with. All right, when I look at properties for sale, there's for 322. I would argue that that's not a two car, so I think that's actually 321. It's relatively new, but if we compare it to other things, just quickly, that's a duplex. It's hard. 660 for 4. That's not really comparable. On the other side, 485 for a 312. Let's have a look at that. Little bit older, decent block, very similar inside, has side access. A little bit older, but new bathrooms. So look, 485. It is in that public housing section. Best person to talk to about that is going to be your property managers to see if it's an issue. There's not too many for sale in this pocket, or ones that I want to compare it with. A little bit further out, 369. Why is that so cheap? That's on a main road. What's this one here? 579. Interesting one here. It's being sold by the vendor themselves, I can tell, because they've taken the photos on a freaking camera phone and at the wrong time of the day because your house is in the shadow. Here you go. No floor plan. 325 car garage. You're dreaming. 692 square meter block at 579. What was our one? 446. Very interesting. So, you tell me. at a quick glance might be a little bit on the higher side. If we go into properties for rent here, there's not much available. I've got 540. I've got 580. And I've got 515. So speak to your property manager in terms of what you can get rent for this area and then sold. Sold in the last 12 months. 420, that's December. That's probably a little bit too far in such a peak market. October, again, let's go. Because it's so hot, I'm actually going to go show me what sold in the last 6 months. 311, agent, contact agent, 495, same agent. Lot happening out the back, big shed. So that's actually probably, there you go. Same agent. They don't have a floor plan, but 936 block. A little bit older house, but, it's brick and extremely tidy. The roof potentially even looks new. That's at 495. They want 545. Hard, difficult market to get a really good price on. 440 for a 2-bedroom. There's just not too many comps, 226. That's interesting. It's obviously a scout haul, but opportunity there. That's dirty cheap. That's crazy cheap. So look, it's a difficult market to sort of get a gauge for price. In the few minutes that I've looked at it, potentially a little on the high side for 545. Would I buy this? No. Reason being, I believe you've kind of missed that growth run, and even off the back of it, because of the history of that particular suburb and what it has done over the last 10, 15 years, doesn't give me great confidence that after the next 1 or 2 years, you're going to see many positives from it. The asset itself, remember, buy shit that has money can solve issues. It being across the road from sort of that industrial look and a telephone tower is just not desirable. It's not the best location. So if we like the suburb and the data, then it'd just be like a block back, and I'd go for something like that. But for me, because of that issue there, because of the data, I would say I wouldn't buy it. And Michael, I hope that gives you a little bit of guidance. But when you're looking at your suburb data, you need to get into something that's just a little bit that is has a little bit more left run. If you're doing sort of the short term, you need equity out of it straight away. I think we might be losing this one off the back of it. So let me know your thoughts in the comments, and as always, I'll see you tomorrow.